experts for today. We have Ashish Kyal, a chartered market technician and author at Wave Strategy Advisors, as well as Gaurang Shah, Senior Vice President at Jayajit Investments, to talk to us about the markets as well as in terms of your stock-related queries. We'll be solving all of that. Ashish as well as Gaurang, good afternoon and thank you so much for joining us on the show. As always, I'll just start with the queries then. Firstly, we'll have the first query that's coming from Priyanka Iyer, who's writing to us from Chennai. She's holding 150 shares of Rajratan Global Wires. Price is 768 rupees, so making a significant loss here. Now, she wants to know if she could continue to hold, sell, or what should she do now? And if she sells, which other stocks should she look at? Gaurang, good afternoon. What's your view on this?
Thank you, Vinny. Good afternoon to you, to my good friend Ashish, as well as to all the viewers of CNBC TV 18. A small disclosure, as always, Vinny. All recommendations are a part of our research team recommendations. Our company, Jayajit or I, we do not have any personal investments, no conflict of interest, no financial interest, but we give our recommendations to our clients on similar lines. They might have their investment. So I think, first of all, a lesson to learn for investors is that don't let your capital erode 50%, 60%, 70%, because then the recovery of the capital itself becomes a tall order and a difficult task. You have to keep your risk appetite in mind and appropriately take steps if your investment is not going the way you wanted it to go. Having said that, we don't have any specific coverage on Rajratan Wires, but we like the sector, Vinny, and we have positive coverage on names like KEI Industries and Polycab. So I think you need to be a little bit careful when you invest in stock market. Let your alarm bells ring and take appropriate steps.
Sure. Okay. Ashish, what's your view coming for Rajratan Global Wires? What should they do? Should you just get out of the stock now and book their losses?
Afternoon to you, Vinny, and all the viewers, and Gaurangji as well. If you look at Rajratan Wires, the stock has been moving very erratic. My suggestion would be it's best to avoid stocks like this one, which has been trading on a thin volume, and suddenly the volume spikes up and then again goes back. So it's best to be out of this stock. I know there is a significant loss at these levels, but we can see their stock has moved from 320 to now 480 levels. So it's a good level from where the price have reversed even previously on the downside. So book out from here your losses and possibly invest into something like a Polycab. We also have our personal investment into that, and that's why the view is bullish, and the sector as a whole looks positive to me.
Okay, sector as a whole looks positive to you, but get out of these stocks which are very volatile. One day you see volumes, next there isn't. That's a view from both our experts. So be careful while investing, but as of now, might as well get out of the stock and look at the other names that both Gaurang as well as Ashish have mentioned. Let's move on then to the next query for today. We have Nikhil Mehra, who's writing to us from New Delhi, holding 100 shares of Pidilite. Price is 1,145. Currently, the stock is trading at 1,457. Wants to know from the long-term perspective, Pidilite Industries, what should they be doing with this one? Gaurang, your view coming in for Pidilite, Q2, consistently they've been managing to perform, so there's no complaining on that front. What's your outlook now?
So, Vinny, I think they have got strong power brands, first of all, Fevikwik, Fevicol, etc. And of course, the specialty chemical sector looks quite interesting. And we do have, as a disclosure, positive coverage on Pidilite. Price point where the investors got invested is also very attractive, and expect higher levels. Like you rightly mentioned, I think earnings are going to get better going forward from here on. So long term, hold on to it.
Long term, hold on to it. And Ashish, what's your view for Pidilite? What should one be doing? Because in terms of stock mover returns, especially in the last 6 months, it's not done much, right? So any indication there?
Yes, in past 6 months, the stock has a very important support of 1420. On the upside, there were multiple attempts to cross that 1670 mark, but it failed. So I think it's consolidating. It's in a range. Now it's at the lower end of the range, and the expectation is at least it should go up towards 1570 again. Continue to hold on. From a longer term perspective, I think the stock is just consolidating before giving a breakout, and we can even see the levels of 1700 and higher. So hold on over here. On the downside, 1420, 1410 can be an important support. On the upside, we can expect 1570 over near term and eventually crossing about 1700 levels also.
Okay, surely keeping an eye out on that. Just at the bottom of your screens, you can see the numbers that have come in for Safari Industries. Stock is buzzing in trade, EBITDA up 53%, 16% approximately growth in terms of revenues. Profits have also seen a very, very strong growth coming in, and that's why look at the spike up that we're seeing in the stock as well. Look at the margin expansion, 400 basis point, almost 340 basis point to be precise in terms of margin expansion on a year-on-year basis. Safari Industries, that's buzzing in trade after its numbers. 8% uptick as of now. Let's move on then to the next query for today. We have Kathi Ravan, who's writing to us from Tamil Nadu. He's holding 75 shares of ITC Hotels. Price is 123 rupees per share. They're making a profit on this one. Wants to know if he should continue to hold for a time period of 5 more years, and wants to know if there are any other good stocks in the sector as well that they can watch out for. Gaurang, your view for ITC Hotels? They're ready to hold it for a long term as well, time period.
Vinny, I think the entire hospitality sector looks very, very attractive. As a disclosure, when the demerger was not done of hotel business and listed as a separate entity, we had a coverage on ITC. We currently have coverage on ITC Limited. Sector is looking extremely attractive. I think most of the frontline companies in the hospitality sector have lined up massive capex in existing assets that they have, and along with that, they have a pipeline of opening up new assets going forward. That means adding launching new hotels. Like I said, we are positive on the sector. On ITC hotels, we don't have coverage, but yes, one name that we are positive on in the hospitality sector is Indian Hotels. So the number was a little bit disturbing for the second quarter, but I think that was one-off. Long-term, we are positive on Indian hotels and we like the sector.
Okay, long-term positive on Indian hotels, like the sector overall as a whole as well. Ashish, ITC Hotels, what should they be doing? Should they continue to hold this? On the charts, what's the indication?
See, ITC Hotel showed a correction from 250 levels, now around 206. But this is a very important price action area. If you look at April 2025, this is where the important supports were. And I think the stock has the potential to reverse up from here on. My suggestion would be hold on over here. The sector as a whole looks positive. The stock has been correcting, but that's a healthy sign. On the downside, important support is around 198. As long as that is intact, we can see some reversal signs, and the stock should again move up towards 230, 240 levels.
Okay, sure. We'll keep an eye out on those levels over there. Will be key as well. So keep an eye out on those levels. Imami's numbers flashing at the bottom of the screen. Profits down 30%. Revenue.
As a people manager, ensuring that your workforce focuses on core business activities is crucial.
You have, and you must have noticed that there is a money control stock score just above the line graph. Now, this is a score assigned to each stock based on money control's multi-factor algorithms. It is calculated by analyzing over 40 parameters, including. Welcome back to your stocks on CNBC TV 18. As of now, when you look at the Nifty, it's holding on to 25,600 again and moved up about that 25,600 mark. So keep an eye on that. But let's keep it going with all your stock-related queries. We still have with us Ashish Kyal as well as Gaurang Shah to solve all those doubts. Let's move on to the next query, gentlemen. We have Sukesh Shetty, who's writing to us from Bangalore. He's holding 200 shares of Coromandel International. Price is 2,213 rupees per share. Wants to know the view on the fertilizer stock post-monsoon. Should they continue to hold? What should they be doing? Gaurang, your view coming in for Coromandel International. When you look at it in terms of numbers, seems like a mixed set of numbers, decent number. Nothing was bad this time. But outlook going forward?
Well, Suvini, again, a disclosure, we have a positive coverage since he got in at 2,200 plus, and currently the stock is trading at 2160, 70 odd. If he's looking at averaging it, I think it will be a good idea to average some at current levels and bring down the cost of acquisition. Don't average a large quantity, but maybe about 50% you can average over here. And if it goes down a little bit more, you can average some percentage again over there and try to bring down your cost. We remain positive on the sector. And I don't think now fertilizer is only a monsoon story. I think the government policies have evolved for better for the fertilizer stroke urea manufacturing companies. So long-term positive on Coromandel International, but need to average.
Okay. Positive on Coromandel International, but need to average. What's your view, Ashish? Should they look to average? And if at average, then what point should they look to average as well?
See, the overall stock trend from the bigger term perspective has been positive. We are just seeing a short-term correction over here. And I think the stock is now at a very important 61.8% Fibonacci retracement level also. So one can average at current levels. We can see positive divergence on indicators. So those signs are showing the downside momentum is reducing and the stock is poised for reversing back on the upside. The support is going to be around 2050 on the downside. And on upside, we can expect the stock to move back towards 2500 or higher levels.
Okay, keep an eye out on those levels over there for Coromandel International. But let's move on. And actually, I just marked two stocks right now. They've just reported their numbers. Both of them spiked up in trade. One is Sarda Energy. You can see at the bottom of your screens for you all. Though they're seeing a net loss of 4 crores versus loss of 2.8 crores last year, we'll wait out for more internals in terms of numbers. Revenue's seen a growth of 32%. But look at the stock, that spiked up in trade after they've reported the numbers. The other one is Carousel. That's another one that spiked up in trade. That was also flashing at the bottom of your screens a short while ago as well, and that is also spiked up in trade. 4-5% of grain is what Carousel is managing to hold on to as well. Look at it. This was also posted its numbers. So keep an eye out on that. Seems like there's a number coming in for Q2 FY26 every minute that we're speaking. But yes, that's about earnings season. But let's move on to the next query. We have Sairam who's writing.
Join us at Kotak Biz Labs to scale up your startup together. We support founders and entrepreneurs with funding, mentorship, and resources to grow. Bring us dreams that are bigger, bolder, and brighter. To know more, visit Kotak.com.
Any positive returns to either investors or traders. Both have actually lost because of the kind of volatility in the stock. And of course, the policy decision from the government and of course the negative impact on the stock. You don't have coverage on IEX, but again, try to limit your losses by taking appropriate steps. However, having said that, we are positive on the power generation sector. Tata Power and NTPC are the two investment ideas over here. No comments on IEX since we don't cover.
Okay. Your view on this, Ashish, what should they be doing, right? Like Gaurang is rightly mentioning, limit your losses. At what point for the investor right now, they bought it at 188 rupees, should they have that stop loss now?
See, I think the buying price at around 188 was just before the policy announcement and the stock seeing very sharp cut on the downside, making a low of around 132, 133 levels. Since then, it is just consolidating. There is no signs of recovery on the upside that we can see, and we do not know how long this consolidation can take. Having said that, I think 133 can be a short-term support on the downside. Ideal will be to exit from the stock or maintain a stop loss of 133. On the upside, if the stock moves back towards that 155 level, my suggestion would be out of it. Instead of this, something like AEC International looks to be much more better, and IEX can be just moving in a range.
Okay, so keep an eye out on those levels Ashish has mentioned, right? 133 could be a stop loss around that 150 mark. If it reaches there, might as well just get out and, reduce the losses that you're already making. So yes, keep an eye out on those levels there. Let's move on then to the next query. We have Meher Khanna, who's writing to us from Visakhapatnam, holding 250 shares of Shakti Pump. Price is 889 rupees per share. She's making a loss on this one. Again, she's a long-term investor. She wants to know if she can continue to hold this for the long term. Shakti Pumps, Gaurang, what's your view?
Well, this stock was quite a performer some time back. I think the stock was trading at about 1100 or 1200. And I think because of some news flows, I think you've seen a downside correction. Makes diversified products in terms of helping irrigation. Don't have any specific coverage, Vinny, on Shakti Pumps. So I won't be able to give a specific comment. Excuse me. But I think the products and the market share is quite good of the company.
And your view, Ashish, on this one?
My suggestion would be to exit from here because the stock has already shown a sharp decline. It was consolidating, broke below its support levels also today and showing some minor recovery, but I think it's best to be out. There is absolutely no volumes and it is erratic. The movement has been erratic and it doesn't look to be good in near future.
Okay. quite erratic, so keep an eye out on that one. But okay, that's the last query for today. So Ashish as well as Gaurang, thank you so much for joining us on the show and as always helping our viewers solve all their stock related queries. Quick look at what the market has been doing. As of now, 25,600, 120 point uptick for the Nifty 50. And in the last 30 odd minutes, which stocks have come up? Sarda Energy, that's the one on the numbers. Graphite India, again, they also reported their numbers. So keep an eye out on that one. With that, HEG also in the last 1 hour is seeing an up move as well. So Graphite India has recovered from the day's lowest point. So keep an eye out on that. HEG, keep an eye out on that one as well. Latent View, that's another one that in the last 1 hour has come up. Also, 1% more uptick that we've seen in specifically last 1 hour. Now, Latent View is trading at the day's highest point. So no complaining on that front for Latent View. As of now, the broader end of the market continues to do or slightly bit better than the benchmark indices. Look at the Nifty mid-cap. 0.6% of gain almost is what the Nifty mid-cap is holding on to, while small cap is holding on to gains of almost 0.5%. So we'll be watching out for that as well. A lot of gainers that have come in, especially Nalco, Torrent Pharma, all these, as well as Nykaa on the back of their numbers, are holding on to very, very strong gains. But with that, we're absolutely out of time. Thanks you viewers for tuning in, but don't go anywhere. Last hour of trade is still left.